Hello friends, Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to talk about why I believe Taiwan Semiconductor Manufacturing Company or TSMC or TSM stock should reach over 2 trillion in market value within the next 2 years. I will also explain why I believe TSMC is actually the most undervalued AI semiconductor company when compared to other AI companies like NVDA, AMD, and Broadcom. Now, if you have been following my channel for a while, you will know that I've been very bullish on TSMC since early 2021. In fact, I've been buying TSMC stock gradually since early 2021, even before ChatGPT came out. Because I knew that TSMC is the most important pure-play semiconductor manufacturing company in the world. My reasoning was very simple. TSMC is behind almost every major technological breakthrough. Without TSMC, there wouldn't be Apple, NVIDIA, AMD, Broadcom, or most of the world's leading tech companies. So whenever there's a technological breakthrough like ChatGPT, TSMC benefits the most because every major tech company relies on TSMC to mass produce their bleeding-edge chips. And that prediction has turned out to be accurate. TSMC has been one of the best performing semiconductor companies, outperforming the S&P 500 by a wide margin over the past 5 years. And if you have followed my TSMC videos since early 2021 and invested gradually over time, you have made at least 2 times or even 3 times on your TSMC shares over the past few years. Of course, investing is always forward-looking and not backward-looking. So in this video, I'm going to explain why I believe TSMC should reach over 2 trillion in market value within the next 2 years. I will talk about TSMC's long-term growth prospects, its recent financials, the biggest risk to consider, and why I believe TSMC is still the most undervalued AI semiconductor company compared to NVIDIA, AMD, and Broadcom. If you enjoyed this video, make sure to hit the like button, subscribe, and turn on notification. I will continue making high-quality investing videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make. So if you'd like to support the channel, check out my Patreon blog in the video description. Our goal is to help our members become multi-millionaires through intelligent investing. As a premium member, you'll be able to follow all my latest stock trades and portfolio rebalancing. You'll get access to my intrinsic value models for all the stocks I'm analyzing, so you'll know when a stock becomes undervalued, fairly valued, or overvalued. On top of that, you will receive my latest stock ratings, exclusive premium content, and access to our Patreon-only Intelligent Investor Discord community. All the links to my Patreon and my Excel account are in the video description. Make sure to check them out. Before talking about TSMC, let me show you this short video so you'll know why TSMC is the most advanced and most important semiconductor foundry in the world.
My level of excitement for the first fab, I would say from a scale of 1 to 10 is a solid 10. I mean, if I could pick 20, I would.
Our clean room, it's just massive. I get goosebumps.
The first hallway that you find is what we call the silver highway.
What we're looking at right now is the automated material handling system. We have about 700 unified pods that carry the wafers.
Flying through the fab.
And they're just speeding up and down and zipping left and right.
Going everywhere, going to a tool, dropping it down. I use them every single day for thousands of my wafers going to anything.
As far as how to make a semiconductor, I think it's still kind of magic to a lot of people.
In each one of these machines, there is a lot of high tech going on. Plasma ignites. Molecules and atoms move around.
We can fit billions of transistors on a single chip.
One transistor is 10 to 20,000 times smaller than a human hair.
To be able to do this is incredibly difficult. We are tricking light using extreme ultraviolet technologies to be able to print line widths at that geometry.
It really blows the mind. You stand in front of something that has as many transistors as the stars in a galaxy. to make these chips exist. We try to make the impossible possible. This is the job of an engineer here.
All the technology that we take for granted, it would not have been made possible without semiconductors.
Everything around us has a chip inside it.
All that we use, the way we live, the way we work, those chips, guess what? TSMC makes most of those.
The technology that we're working on here is the building block of so many innovations going on around the world right now.
This technology is making AI a real thing.
You need these really advanced chips for those that nobody else can make but TSMC.
Let's talk about TSMC's recent financials first, before we go over TSMC's long-term growth prospects. All these financials are in Taiwanese dollars. TSMC has maintained the highest margins and the best financial ratios in the semiconductor foundry industry for many years already. For example, at the time of making this video, TSMC's TTM gross margin is close to 59%. Its operating margin is around 49%, and its free cash flow margin is around 25%. TSMC's return on assets is around 21%. Its return on equity is around 34%. And its return on invested capital is around 24%. TSMC has maintained exceptionally high margins and high profits over the years, mainly because of the company's huge cost advantage and large economies of scale over competitors, TSMC's network effects and large customer base, TSMC's leading process node technologies, advanced chip packaging, and massive chip manufacturing capacity. I always say this in all my videos. The semiconductor market is by nature very cyclical. Most semiconductor companies tend to go through many boom and bust cycles, so it's very important to only focus on the best semiconductor companies that are the market leaders, and that will still be very profitable even during a downward cycle. TSMC is the exception here. TSMC has been much less cyclical than most semiconductor foundries because of the competitive advantage I mentioned earlier. For example, TSMC's revenue and operating income have been growing consistently almost every year over the past 20 years. Similarly, TSMC's operating cash flow and free cash flow have been growing consistently in most years over the past 20 years. One of the main reasons is that TSMC's management has been very disciplined in managing its capex and operating expenses, even during a huge semiconductor downturn such as in early 2023. Here, you can see that TSMC has maintained very high gross margin, operating margin, and free cash flow margin for many years. Other competing foundries such as Samsung Foundry and Intel Foundry have much lower margins than TSMC. TSMC's EPS and free cash flow per share have been growing consistently over the years. Going forward, I expect TSMC's EPS and free cash flow per share will likely double over the next 5 years, because of the large demand for advanced process node technologies, advanced chip packaging, and of course, high-performance chips. TSMC has been one of the best dividend growth companies over the years. Management has stated that the company intends to maintain or steadily increase its dividend each year, rather than focusing on share buybacks. In other words, we can expect that TSMC's dividends to continue increasing over time because of the company's growing earnings and free cash flow almost every year. Here, you can see that TSMC has been very disciplined in managing its balance sheet over the years. For example, TSMC has always maintained much more cash than its total debt over the past 20 years. This is very important for the company because the semiconductor industry can be very cyclical. By keeping much more cash than debt, TSMC can go through market downturns without relying on debt to fund its growth. At the time of making this video, TSMC has around $90 billion in cash equivalents. In comparison, TSMC only has around $31 billion in total debt. This means TSMC can prepay all its debt in advance and still have around $59 billion left. Personally, I like companies that keep much more cash than debt. I want to talk about the biggest risk for TSMC. This risk also applies to all major semiconductor and tech companies, including NVDA, AMD, Qualcomm, Broadcom, Intel, and even Apple. The biggest risk is geopolitical tension, particularly between the US and China, and between China and Taiwan. This has been an ongoing concern for many years already, and TSMC is at the center of it. Now, many investors, skeptics, and media outlets who don't fully understand TSMC have been spreading misinformation that China might one day invade Taiwan. This claim is based purely on speculation, and it's highly unlikely to happen. Here's why. If China were to invade Taiwan, it would trigger a massive global supply chain crisis that would severely impact China, the US, and every country that depends on Taiwan for semiconductor chips. Such a move would be a lose-lose situation for everyone. TSMC is the most important semiconductor company in the world. It's too important for the global semiconductor supply chain. It manufactures over 90% of the world's leading-edge chips. All major US tech companies like Apple, Broadcom, NVDA, AMD, and Qualcomm rely on TSMC to produce their most advanced chips. If China were to take over Taiwan, it wouldn't just be TSMC's problem. It would be a global crisis for everyone. The US will never allow that to happen because the US does not want China to gain chip sovereignty or access to the most advanced semiconductor manufacturing technologies in the world. So don't listen to the bears, skeptics, or media outlets that keep spreading fear, uncertainty, and doubt or FUD about a potential invasion. It's not realistic at all. To reduce geopolitical risks, TSMC has been expanding globally, building new fabs in the US, Japan, and Germany. In the US alone, TSMC is planning to build 6 advanced wafer fabs, 2 advanced packaging facilities, and an R&D center. The total investment is expected to reach around $165 billion, and possibly even more if TSMC builds more fabs in the future. By building advanced fabs in the US, TSMC can reduce concentration risk significantly and ensure that even disruptions happen in Taiwan, chip production will still continue in the US. This will make TSMC much more resilient for US customers and help reduce tariffs at the same time. Now, let's talk about TSMC's long-term growth prospects. I will explain why I believe TSMC will reach over $2 trillion in market value over the next 2 years. First, according to this consensus forecast, TSMC's revenue in Taiwanese dollars is expected to grow by 40% this year. After that, TSMC's revenue is expected to grow slightly higher than 20% each year over the next 2 years. Similarly, TSMC's EPS is expected to grow by more than 50% this year. After that, TSMC's EPS is expected to grow by around 20% annually over the next 2 years. In my view, I think these consensus forecasts are likely too conservative because TSMC's management is already guiding that its AI accelerator revenue to grow at a mid-40% CAGR between 2024 and 2029. Moreover, the US hyperscalers and the largest AI companies are planning to build many more gigawatts of AI data centers between now and 2030. All of these AI data centers will require a lot more rack-scale AI systems in the coming years, which will require millions of AI chips, custom AI accelerators, x86 CPUs, ARM-based CPUs, networking chips, advanced chip packaging, and silicon photonic networking chips. For example, according to a Citi Research report, the hyperscalers' total capex is projected to rise from $393 billion in 2025 to as much as $684 billion by 2029. A large portion of that spending will go toward traditional cloud servers and massive AI data centers, all of which will require highly advanced chips manufactured by TSMC. Moreover, when we include neoclouds, sovereign AI investments, and private investments, global capex related to AI infrastructure is expected to surge from $397 billion in 2025 to over $2 trillion by 2029. All of this massive AI infrastructure build-out will directly benefit TSMC because the company manufactures over 90% of the world's leading-edge chips. Now, here's the important part you should know. TSMC works with nearly all of the major tech companies, including NVIDIA, AMD, Google, Amazon, Microsoft, Meta, ByteDance, OpenAI, SoftBank, and ARM Holdings to manufacture their most leading-edge chips. Even Intel relies on TSMC to produce some of its high-performance CPUs. The reality is that TSMC doesn't really care who wins the AI race because everyone uses TSMC. TSMC has the most advanced process node technologies, the best chip packaging technologies, the largest economies of scale, extensive manufacturing IPs, and the largest chip manufacturing capacity in the industry. So it makes sense that most chip designers and tech companies will continue relying on TSMC to mass produce their advanced chips. As AI models keep improving, becoming more powerful and more efficient, there will be many new use cases, which will drive even greater AI adoption and AI consumption. And that in turn will drive even higher demand for AI compute and AI chips. In the semiconductor foundry market, there are only three major players competing at the leading edge nodes. There are TSMC, Samsung Foundry, and Intel Foundry. TSMC has dominated the global foundry market for many years, holding over 70% of total market share. Now, when we narrow it down to advanced process nodes such as 7 nanometers and below, TSMC actually makes over 90% of the world's most leading edge chips. In comparison, Samsung Foundry has been gradually losing market share to TSMC almost every quarter in recent years. As for Intel Foundry, it's not even among the top 5 global foundries yet. At the time of making this video, Intel Foundry is still looking for its first major customer for its 18A node and its upcoming 14A node. So why is this the case? Why are Samsung Foundry and Intel Foundry still behind TSMC in chip manufacturing? I believe there are several key reasons. First, TSMC is a pure-play foundry, meaning it focuses entirely on chip manufacturing and doesn't design its own chips. This allows TSMC to avoid competing with its customers. This is why companies like Apple, NVDA, AMD, Broadcom, and Qualcomm can fully trust TSMC with their most advanced chip designs. On the other hand, Samsung and Intel are what we call integrated device manufacturers or IDMs. They not only manufacture chips for other customers, but also design and sell their own chips. This means their chip design businesses often compete with their foundry customers. Even though they try to separate their foundry and chip design businesses, it's still very difficult for major companies to share their chip designs and IPs with them. Second, TSMC can dedicate 100% of its R&D and CapEx to improve its chip manufacturing technologies and capabilities. Samsung and Intel, however, have to split their budgets between their own product development and their foundry businesses. TSMC also has a much larger R&D and CapEx budget. This gives it a huge competitive advantage in building the most advanced process nodes and chip packaging technologies. Third, both Intel Foundry and Samsung Foundry have faced major problems over the years, including delays in developing leading-edge process nodes, huge yield issues, and cost overruns. These problems make it very difficult for them to attract enough external customers. On the other hand, most customers prefer to work with TSMC simply because it's much more reliable. TSMC's most advanced process nodes often have the highest yields. It has the best manufacturing capabilities and capacity, and it doesn't compete with its customers. Fourth, TSMC has the largest economies of scale and a significant cost advantage compared to Intel Foundry and Samsung Foundry. By having the most external customers in the industry, TSMC can spread its massive R&D and operating costs across millions of chips. This allows the company to maintain very high profit margins and generate strong free cash flow almost every year. And fifth, most companies have already optimized their chip designs specifically for TSMC's manufacturing processes. Switching to another foundry like Samsung Foundry or Intel Foundry would be extremely costly and risky. Designing a leading-edge AI chip can easily cost hundreds of millions of dollars or even over $1 billion. It simply doesn't make sense for major companies like Apple, NVIDIA, or AMD to take that risk to switch their chip designs to Intel Foundry or Samsung Foundry. That's why I believe TSMC will continue to dominate the global foundry market and maintain its leadership in producing over 90% of the world's most advanced chips. According to TSMC's latest forecast, The company expects the global semiconductor market to grow from around 700 billion in 2025 to just over 1 trillion by 2030. The biggest growth drivers will be high-performance computing and data center AI accelerators, followed by AI PCs, AI smartphones, mixed reality headsets, autonomous vehicles, and eventually millions of humanoid robots. In this new AI era, all these applications will require far more advanced, more powerful, and more energy-efficient chips, which will ultimately benefit TSMC the most. If you look at TSMC's recent financials, you can see that HPC or high-performance computing and smartphone are the two largest platforms. HPC will be the largest growth driver for TSMC going forward because AI chips will drive the highest growth rates over the next 5 years. Here's another important point you should know. I've mentioned this in my previous videos. TSMC not only has the most advanced process nodes and the best yields compared to Samsung Foundry and Intel Foundry, TSMC also has huge pricing power. For example, TSMC's current N3 node costs approximately $18,000 to $20,000 per wafer. According to several sources, TSMC's upcoming N2 node costs around $30,000 per wafer, and future more advanced nodes will cost even higher at over $45,000 per wafer. This is why TSMC can maintain its profit margins and grow its earnings consistently over the years. As I mentioned earlier, one of TSMC's biggest competitive advantage is that it consistently makes the most advanced process nodes and the highest yields compared to Samsung Foundry and Intel Foundry. TSMC's latest N2 node is expected to enter volume production by the end of 2025, followed by the N2P and A16 nodes in 2026, N2X in 2027, and the A14 node in 2028. These new nodes will deliver much higher improvements in performance, power efficiency, chip area, and of course, transistor density. Now, designing a high-performance chip is extremely expensive. It can easily cost hundreds of millions of dollars or even over $1 billion. That's why most companies such as Apple, NVDA, AMD, Qualcomm, and Broadcom will continue to rely on TSMC for mass chip manufacturing. Their chip designs are already optimized for TSMC's manufacturing processes and process nodes. Migrating their chip designs to Samsung Foundry or Intel Foundry will be too risky and extremely costly, especially since those foundries often have lower yields than TSMC. Based on what I know, TSMC also dominates in advanced chip packaging technologies, which use 3D stacking and packaging methods such as CoWoS and SOIC to connect multiple chips together. For example, NVIDIA primarily uses TSMC's chip-on-wafer on substrate or CoWoS technology for its high-performance AI chips. For its next-gen products, NVIDIA plans to use TSMC's system-on-integrated chips or SOIC technology. Similarly, AMD mainly uses TSMC's SOIC for 3D stacking of chiplets and CoWoS for packaging high-performance AI chips and HBM memory. This is why it's extremely difficult for NVIDIA, AMD, and other chip designers to migrate their chip designs from TSMC to Samsung Foundry or Intel Foundry. One of the best ways to forecast TSMC's HPC revenue is to look at the company's expected CoWoS capacity growth over the next few years. According to JP Morgan's recent forecast, the total CoWoS consumption is expected to grow by around 81% year over year in 2025, 60% in 2026, and 34% in 2027. Naturally, TSMC will continue to have the largest CoWoS capacity share to support its customers' AI demand. I believe this forecast indicates that TSMC's HPC revenue will continue to have very strong double-digit growth rates over the next 2 years. Now, speaking of forecasts, TSMC's management gave several important indications in their recent earnings call, suggesting that AI demand has become even stronger than it was just 3 months ago. TSMC often has a far more accurate view of end market chip demand than most semiconductor companies. This is because TSMC works closely with all of its major customers, has visibility into their product roadmap several years in advance and understands whether their forecasts are realistic or not. For example, if NVIDIA places too many wafer orders in advance, TSMC will tell NVIDIA that its forecast is not realistic, or TSMC will limit the number of wafers and CoWoS capacity allocated to NVIDIA every week. TSMC mainly engaged with its customers, including Apple, NVIDIA, AMD, Broadcom, Qualcomm, and MediaTek. However, in recent months, TSMC management has started engaging directly with these downstream companies to better understand how much AI and high-performance computing demand will grow over the next 5 years. Right now, there is still not enough compute capacity to meet the growing AI workloads. AI demand continues to far exceed supply, which is why OpenAI has been asking TSMC to expand its wafer and CoWoS capacity for months already. Initially, TSMC forecasted that its AI accelerator revenue will grow at a mid-40% compound annual growth rate, or CAGR, between 2024 and 2029. Now, TSMC expects its AI accelerator growth to be slightly higher than its previous forecast. Management also mentioned that the engagement lead time with customers is now at least 2 to 3 years in advance. This is very important because it indicates that AI and HPC demand have become even stronger than before. Customers now have to place orders and reserve manufacturing capacity with TSMC much earlier than before. Let's talk about TSMC's stock valuation. There are several ways to value TSMC stock, but one of the simplest ways is to look at its 4P ratios compared to its expected earnings growth rates over the next 2 years to see whether the valuation looks reasonable. Right now, I believe TSMC's 4Ps are too low given its strong growth outlook over the next several years. For example, TSMC's 4P for this year is expected to be around 29, which is a bit low considering that its EPS is projected to grow by approximately 47% this year. Next year, TSMC's 4P is expected to drop to around 24, even though its EPS is expected to grow by around 20% year over year. I believe that's way too low for a mission-critical semiconductor foundry that's one of the biggest beneficiaries of the current AI revolution. Another way to value TSMC stock is by comparing its 4P with its peers. Right now, if you compare TSMC's 4P to NVIDIA, Broadcom, AMD, and Intel, you will notice that TSMC still has the lowest 4P, while Intel actually has the highest 4P among them. This suggests that TSMC remains one of the most undervalued AI semiconductor companies, especially considering its strong growth rates and long-term growth prospects in AI and advanced chip manufacturing over the next 5 years. Let me show you this fair version too. We plan to release this investing app later on this year once we finish registering our company. I always use this fair version tool to find out whether a stock is likely undervalued, fairly valued, or overvalued. Typically, I like to invest in high-quality companies like TSMC only when the stock is below its fair value to help reduce the downside risk. In this chart, the blue line represents TSMC's stock price. The orange line is TSMC's fair value over time, and the dotted lines are the price targets. At the time of making this video, you can see that TSMC is very close to its fair value, which is around $292 per share. This suggests that TSMC is fairly valued right now, or even slightly undervalued when we consider its 4Ps and expected growth rates over the next 2 years. So will I buy TSMC stock? My answer is an absolutely yes. I plan to keep buying more shares whenever TSMC dips below its intrinsic value. In fact, I've been buying TSMC shares gradually since early 2021. This is just from my investment accounts. I also hold TSMC shares in other accounts. Back then, in early 2021, I realized that every major tech company would continue to rely on TSMC to mass produce their leading-edge chips. I knew that if there were any major technological breakthroughs, TSMC would still be one of the biggest beneficiaries. Fast forward to today, that prediction has turned out to be correct. TSMC has become one of the biggest beneficiaries of the current AI revolution. all the major tech companies such as NVIDIA, AMD, Broadcom, Qualcomm, Apple, and even Intel continue to rely on TSMC to manufacture their AI and high-performance chips. This is because TSMC has the most advanced process node technologies, the highest yields, the best chip packaging technologies, the largest economies of scale, a huge cost advantage compared to other foundries, the best manufacturing capabilities and processes, and the most customers in the foundry industry. This is why it's nearly impossible for Samsung Foundry and Intel Foundry to compete with TSMC. So in summary, I believe TSMC's market value should reach over $2 trillion within the next 2 years because of its long-term growth prospects in AI and high-performance computing chips, its expected earnings growth, and all the competitive advantage I have talked about throughout this video. Now, everything I've shared here is just my opinion based on my own research and analysis. This content is for informational and educational purposes only. It's not financial advice. There are always risks in investing, so it's important to invest in what you know and not speculate. Always do your own research and thorough due diligence first before making any investment decisions. Thank you for watching and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.